Hello, 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 everyone. Happy Thursday. Can't believe it's Thursday already. How's everyone doing? Good morning, Sterling. Good morning, Patrick. Good morning, John. Who else is there? Thank you for putting in all the GDP and unemployment stuff, Sterling. Good morning, Tony. What else do we have? Good morning, Harold. Again, not a lot. Thanks you for putting the earnings in. Winnebago, the big one this morning. Was a inline and a neat. It was neat. It was a beat. So, but there's really nothing going on there. So there we go. Woof, Petco Health and Wellness beat miss. Oh well. Oh well, that's going to shake the markets. All right. So, I mean, the real stuff yesterday, market started selling off after the open. And then we had the tariff announcement. 25% auto tariffs for things not made in this country across the board. No exceptions, and the market was not happy with that. I guess it's going to be next 3.5 years at least of constant Trump derailment of the markets, whether it be good or bad. Hello, Daniel. Good morning. Good morning, Royal Palms. Good morning. Hello, Charles. So, we'll get to what I'm watching for today. Real quick to recap the numbers. GDP, the final numbers of Q4. Again, these aren't having a ton of impact because they were roughly in line, slightly better. Consensus was 2.3, coming in at 2.4. The GDP price index coming in a little better. Initial jobless claims coming in 1K better than consensus. Continuing jobless claims, also, that was a bigger drop. The continuing jobless claims coming in at 1856 versus 1890 expected. Core PCE prices, now this is for the whole fourth quarter. Consensus was 2.7, got revised to 2.6. So a little better there. What else do we have? PCE prices for the quarter coming in line. So, and consumer spending a little less than expected, dropping from 4.2 to 4. Nothing that really shook the market, though. What else we have coming out today? We have pending home sales. We got Kansas City Composite Manufacturing Index, and we got Barkin speaking after the close today. So, not a lot else. It's all going to be whether the administration announces more stuff ahead of April 2nd, whether it refines its tariff talk. We'll have to see. Tomorrow, keep in mind, now these numbers are important. The PCE numbers for February. So, 8:30 Eastern time is going to be key time. And then 10, we got the consumer sentiment and the consumer inflation expectations. Can't speak today. Inflation expectations coming out tomorrow. So tomorrow is going to be, or it could be, a volatile morning. Who else is here? Good morning, David. Does anyone know what made in America? I mean, this is the question. So let's say it has some things. I know if it was assembled in Mexico, it doesn't qualify. But how's this going to affect the subcomponents? That is going to be key because so many subcomponents. But we'll have to see. We'll have to see. And again, it could still be revised. No more comments for me. No more comments for me. All right, NVIDIA down. NVIDIA, I put on the X feed yesterday, triggered a 4-hour double top. AMD down. Meta down a bit, but Tesla up a bit after its pullback yesterday, and the other mega caps sort of pretty much flat. Sort of a quiet morning going into stuff. If we refresh the sectors, real estate is leading. Consumer defensive. Technology is the biggest thing, but only down 48 basis points. FedWatch tool, let me refresh this just to see if, I doubt it did. I'm just seeing if anything from those prior numbers changed anything. I doubt it did. We should still have 2 cuts on the table. Yep. June and next January. Fear and greed still in fear mode. Schiller PE still 35.58, so still above 35. Sterling went through the Earnings after the close, the big one today is Lululemon, but won't be market moving. Athleisure wear, I'm sorry, is not going to move the markets. Now, we had did this invalidate the final target after we hit the second target? No. Final target is still in play. Now, this is where I start watching for the second reaction. Even if we drop today, I start watching for the second reaction. That's going to be very telling. Also, this has turned into, it did hit the first and second targets. It's officially turned into a channeling double. So, if you take the double out of it and just say, okay, it might be over with only hitting the first and second targets, I'm going to be watching the bottom of this channel line very closely because, all right, we had an initial down move. We've had a corrective move, and let's see if this holds or not. Now, within that context, on any rally, the first key level I'm watching is 5770 area. Then more key is 5784 to 5797 is very key on any rally. Even if we go choppy today, tomorrow morning I'll be watching for that if we do bounce back. That's going to be key. Now, remember, if we do sell off and test the lower channel lines, lower your harmonics to the new low. And then what's going to be really key is the 50 to 62.5 area. On the flip side, there we go. Very key for me is about this 57.25 area over the next few hours. If we do break below the channel line, minor is 5,700 for me, but major will be 56.65, 56.64.75, 56.50. So right there on a closing basis. Also, you can see how dips below that, even back to last Friday, were bought. And now that's the critical 62.5 harmonic. Okay? So that's going to be very key on a continued pullback. But if we get a bounce over the next couple of days, that's going to be the secondary reaction I'm going to be watching for to see if this is going to roll up into maybe another double top, whether it's not going to even get there and then we're going to roll over, or whether the move continues. That's why this next move is so critical. It's why I don't worry about, okay, do I need to panic? Is the market selling off again? Do I need to get short again? No, unless the market just outright tanks due to something, then you know what? Then you just have to hop on the momentum. There's generally and that's rare. There's generally the secondary reaction, which gives you the information you need to structure, or at least the information I need to structure the next trade. Good morning, Heinrich. Good morning, PMG. Good morning, Anissa. Good morning, Martinez. Auto parts are subject to the tariffs, so the thought is that the foreign manufactured parts will be subject to the tariffs, but not total auto if it is assembled here. So even if it's assembled here, it's like if it's made in America, but there's so many parts that I know you're way more an expert of me than this. Then Sterling is better suited to discuss this than I am, since he is in the auto business. However, let's say that there's so many parts that come from Canada and Mexico, period. Because there's so many parts to make up a car. It's going to increase the price of cars across the board. It's not just like any car that's made in America is still, that's fine, because they're where all the parts coming from. And you can't just spin up plants overnight. It takes time. And it takes money. So correct me if I'm wrong, Sterling. I think if these actually go in and are implemented, I think you're going to see across the board price increases in vehicles. All right. Let's just glance at the weekly on this. So you can see, didn't even get up to the rotation zone on the weekly. This bar is looking very weak. So I'm going to see how this week closes and then pay attention next week to the low. We are at cycle bottoms. We come out oversold. But if the market can't get a substantial bounce on, the next down move could be very interesting. And remember, the final stuff for the tariffs is April 2nd. That's next Wednesday. NASDAQ. First, second targets hit. I'm just going to repeat again. Today, if these lows hold, first level I'm watching is around 20,135. Then we got 20,200. Then we got this is the key zone on any bounce, 2070 to 2336. That's the key area that I'll watch for another rollover. All right, if this double is not going to play out. Now, the flip side to that, if I could draw, boy, I'm having trouble drawing and speaking this morning. So the NASDAQ's closer to this. 19,940 is the first key area, which is the 50% retracement of this up move. And also you see all these topping of the candle bodies right near that area. The critical area is right around 19,780. 19,790. Right in that area. You close below there, tips the probabilities. And then this would also be a channeling corrective double. You can see it here. And that is also, you couldn't even make it back to the weekly rotation zone. So I'm paying very close attention to this on, and again, the breakdown play. The breakdown play. If we get, especially if we get below that that 62.5 level. Hey, Richard. Richard, you're late. What's going on, Richard? So that's where we sit right there. The Dow. Very, very key support is coming in on the Dow just from price action, about 42,300. Key resistance is 42,950 area. And again, just clean up this chart real quick. I'm still expecting, because longer term, remember, I'm still expecting these markets to roll over. It's just whether they complete these short-term bounce patterns or not. Why the Dow also closed below 62.5 and triggered a massive topping pattern. Now, key support on the Dow is 42,100, and then if it gets below 41,836, it tips that, okay, we're going to at least retest the lows and probably continue down lower. Russell. The Russell had a little mini double yesterday and now has continued lower. The Russell, though, the key levels I'm paying attention to on a closing basis, I'll just give that as 2048. By the way, this is still a valid potential double top on the Russell for the 4-hour for the first and second targets. Okay? That would be on a close, a 4-hour close below 2051.5. So I'm paying close attention to that. The VIX, again, we popped up yesterday with the tariff talk. So we need to start really moving down and retest the 17 area before I'll get more so bullish with the potential with the double top bottoms completing. Jeez, I cannot talk this morning. Sorry about that, everyone. So that's what it is going to take. If we keep rising up, 20 is my key level for really starting to sell off in earnest again. The DAX, weakened. Double was invalidated and stopped out on there, the little mini double. So the DAX now also looks like it's going to close below 62.5, so I'm going to watch for it to reconnect with the 50 and then possibly break down there. DAX has put in a huge sideways move, reconnecting with the weekly rotation zone, but I'm going to be watching for this area to break. So I'm going to be watching for weakness on any rallies. The notes, testing the 50 EMA, going to be watching for that to potentially break and then return to 109.20 at a minimum. The yields, we held up yesterday above that key level. So this is the highest close since February 24th. It is struggling here, but it looks like it's trying to gain traction, and we might get the first cross the rotation zone. So I'm still paying attention to this 4.33 level on a closing basis. but I'm starting to look at this as building a base here. Let's see. If tariffs goes as planned, you will see some price increases across the board. I think Trump will show some leniency with the Japanese and Korean brands due to their levels of U.S. production. All right, so let's see if that plays out. Keep us posted with your thoughts, Sterling, please. It's very valuable because the auto sector is a major, not only manufacturing sector, but it affects retail consumers a lot. So, thank you for your thoughts. Dollar index. The first target has officially been hit. So, at a minimum, it's raising a stop here. At a very minimum. The only thing that invalidates it at this point, the farthest away the stop would be on a closing basis below 103.47. I would not have a stop that far away personally, because if it turns down and breaks through this key support about 103.50, it could be over. It's still against the flattening out rotation zone, but I'm watching for the dollar after we might get a little corrective pattern to continue higher. Remember, weekly is still trying to turn up, coming out of very oversold conditions, and the rotation zone in the 50 is still higher. Crude. Second of the double targets hit yesterday. We do officially have the first cross rotation zone, so I'm watching on any pullback for support, but the next target we've already ticked off also the 200 SMA. Next target higher is 71. On the bigger picture, we've held this key base. So it's going to be interesting now. The next major target, if we go through 71, is 72.10 for me. Gold, bouncing up. Bouncing up. We had the double confirmed here. This would have had to be traded on a shorter term basis because the close was right there, and then spike through the first and second targets and retesting the high area. And remember, it was on the 1 hour that it was valid. That's where you got, see, the second target was right still within the move. That's why it had to be triggered on the 1 hour. So here's the trigger on the 1 hour. The pullback to the rotation zone, the rotation back up, take you at the first target, second target, and those were the valid ones. So now what do we have? Now what do we have? This is interesting. On a daily basis, we have pretty much an exact double top. This does not mean it has to stop if this does continue. The next minor harmonic is 3080.5. A move above that invalidates this potential double top. We do have a potential double top. So for shorter term to medium term trades, that is a key area to watch for. Would this invalidate longer term trades yet? No. But that is a key, and remember, it is against the rotation zone, so it's slightly lower probability. But that could be a great area to keep a stop on a closing basis below 3,004. Now, this is something that if I was going to put a stop there, I'd put it on a closing basis just below 3,000. Why? Because of the round number principle, and 3,000 is very key in gold. So many people are watching that on the way up. It'll be very key on any pullback. Now, this may never trigger. It may invalidate before it triggers. It's just something to watch for from a trailing perspective. Because also remember, gold is getting extended again. So when it gets extended, I start watching for topping patterns. It doesn't mean I have to do anything. It's watching for topping patterns. Also, we roughly made, what was the highs? 3065.2, 3065.5. So a higher high by just a little bit. But it looks like we're going to be making a significantly lower low in the RSI. So that's why I'm paying a close attention to that from a gold perspective. Ford GM has shifted a lot of assembly to Mexico and the supplier base too. I think U.S. auto leaders will influence him. Well, let's see if that's true. Hey, thanks for chiming in, David. I appreciate your feedback. I appreciate it. So, not much to talk about copper. This was a sort of a bear setup candle, and we broke below it, and copper very overextended. So I'm now watching for it to see where this pullback leads us on copper, and then I'll watch the secondary reaction to see if we have a more substantial top in. Yen. This is, so we're basing, and now looks like we're moving up. Next target for me is 151.80 roughly, then 152.70. 271. Euro. First and second targets hit, and my second target was key for me because that's where the flat 200 was. All right. So, not saying this won't roll over again and play out, but I'm just now watching for this bounce to see where it closes. But then if it does take out that 200, we are into a clear path move on the daily, which could eventually take us all the way back if things really shift to 105 area. But we have to get through this 200 first. Spiders, remember it played out the double yesterday and then the reversal. On any rally, 568.59, and you can put your harmonics like I showed you on the futures. You can draw that from the high on Tuesday to the low, whatever we make to this morning on the open, if that holds. Other than that, if we roll over, we have a gap fill back to 563.98, so 564. Let's see how that plays out with our harmonics here. So right behind that, then we have 563, which is the 50%, which we had a pretty decent support base there from the 17th, from the 19th, and from the 20th, and then we're critical for the rollover for this double that completed and the channeling aspect is 559.70. The Qs didn't quite get to the final target, rolling down on any bullish play today. Again, use your harmonics, but 484.38 is for the gap fill. Now we still have a gap that left down below her, 480.84. 480.84, and then 480 is the next key level. And on a closing basis, if it goes through there, 476.63. Part of this move is to onshore production and try to open up foreign markets to U.S. vehicle imports by getting tariffs lower. The EU is looking at lowering the tariffs, the current U.S. rate of to the current U.S. rate of 2.5. Let's see how it all plays out. Very interesting. Again, thanks for the information. It looks also like Bitcoin's it never formed a double, but it looks like it's clearly forming a channel. But there's no rollover play yet. No rollover play in Bitcoin yet. A lot of things aren't looking so healthy. A lot of things aren't looking so healthy. By the way, NVIDIA, let's see where this is what I posted on X. If you're not following me, it's at MG Arnold. I posted this on X. Close, here's the 4-hour close below this double top. Is it completely valid? Yeah, because the first and second targets are within the move that started it. The third target is still within the candle bodies. But you want the first and second, or within the candle wicks. You want the first and second target within the bodies of the move that started it, and that has happened. So the first target to downside is 110.82. The next target is 108.78, and the final target is 106.86. Also, this is technically a clear path move with the gap. And remember, we have a gap. Look at this. Look at the gap left behind and the second target. They're pretty close. So I'm going to be paying very close attention because it looks like a gap down today close to where we're going to be getting the first stop reduction. You're a buyer of NVIDIA at 80 to 90. Well, you have, which could very well, we could very well get there on the next rollover play. Remember, weekly has gone bearish. The next major area, 92.68, which is by the lows from the 5th of August. If that breaks, though, very, very key. I'm in no rush on NVIDIA. Very, very key is around 82. 82 is a 50% harmonic from this whole up move. That's where I'd be watching for a key pattern. If that breaks, you know what? Could NVIDIA, over the next few months, really reconnect with the 200 week because that's going to keep rising. This could be over the next few months. We could see, and look, it could reconnect with the 62.5 area before all is said and done. This is not something I'd be chasing at the moment. I would be very patient. Remember, Tesla completed its double, pulled back into the rotation zone. I'm now watching to see what the reaction is to the bounce pattern here. Why does it make you cry, Charles? Also, it would be helpful for anyone who's really interested in understanding Trump's negotiating style, read The Art of the Deal. Yep. You know, I don't like his negotiating style for country to country. For real estate and other stuff, great. But for country to country, not that big a fan. But it is the way he does negotiate. What else do we... Oh, we had AMD. Then we'll take a look at the open. AMD. We had the recent double bottom, which played out. The recent double bottom played out against the harmonic. You can see that clearly played out. So that was done. Then we came into a major resistance area. Yesterday was a very bearish candle. Here's your major. So here's your support. This is your daily broken. Here's your double bottom that played out. Tried to get above that key resistance level. So support turning into resistance, confirmed resistance, and then the pretty decent gap down. And remember, the magnet price for AMD is still lower. And it's returned to the weekly rotation zone and making so far a bearish candle. So from my perspective, would not be rushing in to buy anything AMD related. And the key thing to really resume the move, this was pretty bearish, but the key thing on the next rollover would be a close below 102.67. And you still have a gap down here. And then another gap here. So we could easily see some cascading moves on. We're going to watch this bounce, the secondary reaction here, for rollover plays in AMD. If you don't want to read it, so this is from The Art of the Deal. Think big, use leverage. Well, he does that. Fight back, definitely does that. Get the word out, deliver the goods. Well, we'll see. Again, all the talk about Greenland again. Okay. So, and again, the art of trading for me is learn harmonics, learn secondary reactions, learn double patterns, learn the 62.5 rule, stay on the right side of the overall market. All right. And manage, first and foremost, manage reward and risk. That is critical. Those are the art of the trade. With that, let's just peek at the S&P. So weakness into the open. Weakness into the open, retesting when the gap down lows from last night, retesting that. So again, you still have the gap left behind. You still have a gap left behind here. And then, so right there, remember that one. Remember that one. That could be an interesting that I didn't point out before. We still have a gap left behind. And that gap fill, which is really in line with this bottom channel line, would be to 57.1825. So I'm paying attention to how we react there. All right. You just took your short done with the NASDAQ today. You are rolling today. I'm something today. I don't know if I'm rolling. Crude's driving you insane. Well, don't let the markets drive you insane. They're going to do what the markets do. And it depends what time frame. That's why I don't trade crude on like a 5-minute chart either. You can get a lot of back and forth price action. Crude is better for swing trading. 4 hour and above. In regards to the automotive industry, there's a reason why manufacturing has left the U.S. I agree with you, David. You stopped at your crude long. Again, I'd recommend, if this is just my recommendation to people attempting to trade crude, 4-hour time frame and higher is best for crude, is what I found. 4-hour patterns, 4-hour time frame. You can trade micro crude. You can trade with wider stops. With that, thank you everyone for tuning in. I hope you all have a wonderful, wonderful trading day. Remember, we have key information coming out at 8:30 Eastern tomorrow. So pay attention to that. And with that, I will see everyone back in the chair tomorrow. Bye for now.